As Microsoft collapses as well as the NASDAQ and housing becomes more unaffordable, is this the beginning of a bigger thing to come down the line, or is this a buying opportunity for some things? Stick around, today should be a great video. Hello my YouTube friends and happy Thursday! Glad to be outside again because let me fix my hair a little bit here. Sorry, as I'm looking at myself, seeing that I need to make myself pretty. Super excited to be outside. The weather is absolutely beautiful, so I enjoy that. I will be in the office more than I am outside. It was just an opportunity to get out here because nobody's doing any construction next door. It's quiet, it's sunny, and I just got back from my walk, so forgive me that I'm excited to be sitting here. Anyway, for those of you who don't know me, my name is Adam Kahn, and this is Investing with Adam K. Now, I've also started another channel. I will post this video on both of them. I think the other one is called like Dividend Retirement or Retirement Dividend. I will try to remember to put the link in the description, but forgive me that I'm lousy at this stuff. And this is really just a place for me to vent and yap and talk where I get my thoughts out. And actually, it's also that, I was talking with one of the people I chat with. It's a way for me to kind of timestamp some of my ideas, which means I get to look back on things and see how I've done and if my predictions were right, because predicting the future is pretty much near impossible. So to start off with that, I bought Microsoft today, and I will keep you guys updated because I put it in my trading account. I saw the stock collapse. It's one of those grade A companies that I always want to pick up. They beat on both top and bottom line, which I see as really good. And the stock is down like 6 or 7%, causing the NASDAQ to crater as well. And I think it's a great opportunity. Now, that is just my opinion. Please, anything that I talk about in these videos is not financial advice. I am not a financial advisor. I am just a guy on YouTube showing or sharing the information that has worked for me over the years. You need to do your own research. You need to reach out to a professional financial advisor and get advice from them and not from me. And I don't think anybody on YouTube, because your goals, my goals, they're going to be two different things. Either way, I will keep you updated if I get out of Microsoft. At least right now, I have no plans. I suppose if it drops below 400, it might scare me out since I put it in the trading account. It is not in the set it and forget it. I do see it as a good opportunity because they're growing at a rapid pace, and similar to what happened at the last earnings with Meta, the amount that they're spending on CapEx is what's freaking out the investors in the market. And I think that's a little bit over dramatic because companies like Microsoft tend to do a really good job with their investments, and they're able to use that money to grow their companies faster. They are growing at an exceptionally fast rate. They're increasing their revenues, they're increasing their profit margins, and if they are deciding that they need to spend on AI to be competitive and move forward, I trust the people that are running the company that that's the decision that they should be making. I don't really sit there and second guess them and think, oh my God, they're spending way too much and they shouldn't be spending it because it's going to be wasted money. In fact, the CEO even outlined why it isn't, where they're able to use it. And if they were using it in the one product that they would like to see doing better, that it would have done better, but they're using it across their whole spectrum and not just to drive that unit. Now I'm going to hop all the way to housing for a moment because I was watching a video that Tom Bilyeu put out, and sometimes I really like his videos, sometimes I don't. I think he's a bright guy, and he had a guy on there talking about the housing market who really, I wish I paid attention to his name because he talked a lot about things that kind of, maybe he verbalized it better than I do, that there are problems in the market, that the politicians, I don't know if they just don't understand economics or if they do it on purpose because for politics, it's better to give a sales pitch of, giving money to people to help them be able to afford a home might be a better sales pitch than saying that we need to build more houses and it's going to take years before the supply meets the demand a little bit better to make it affordable. But the concepts that the politicians come up with are things that are actually going to make housing more unaffordable. You can't throw money at the problem. You can't give people down payment assistance and not expect that to make the housing more expensive, because the problem is there's a lack of supply for the demand of the housing. And giving people money to be able to make it more affordable in turn will push the prices higher. So let me try to explain, because I know that came out quickly and may not have made a lot of sense. So let's say there's 10 houses and 20 people who want to buy it, right? You have a lopsided amount of supply for how much demand there is. Well, if the 20 people can all only afford $100,000, maybe the houses are, $100,000, and maybe the sellers are trying to get $105,000. If you come along with this program to give some of those people more money to be able to make the houses more affordable, and all of a sudden you give them a $20,000 grant if they qualify, and let's say 10 of those people now qualify, that's going to in turn push the price of the houses up to that $120,000 because of the free money that you're throwing at the problem. In turn, if instead you made licensing a little bit easier, you allowed builders to build, you gave them tax incentives to make affordable housing, but it takes time to get them out there, and they were able to put up those 10 new homes, eventually the amount of supply would meet the demand. You wouldn't see the house prices shoot up the same way, but throwing money at the problem pushes the prices up, defeating the whole purpose of what you're actually trying to do, whether that's on purpose or by accident. Because every time the politicians step in to try to make housing more affordable, they're doing things to help the buyer side of the equation. And it's kind of funny to me because I watch the comments in the comment section, and people don't they sit there blaming greedy sellers and everything else. But the buyers are just as greedy. I'm watching somebody talk about an area that the prices have dropped. I think it was like 30%. And it's the guy who does the Reventer app. And he was kind of saying in certain places in Austin, they're tempted to turn from calling it an opportunity to sell to making it a place that might be attractive to buy because the prices are making sense now. And all the people in the comment section are like, it needs to drop another 70%. It's so ridiculous, the greedy sellers, and I'm thinking, man, unless these things drop to zero, these guys are never going to buy. They're always going to think it's overpriced. They're always going to think somebody's ripping them off, and the market and life and everything is just not fair. And it's kind of what I hate about the gloom and doomers, which I've talked before. It gives these people an opportunity in the comment section to talk about how life isn't fair, how the politicians cheat them, how their boss cheats them, how sellers cheat them, and they're never going to make it. And it gives them a platform to stay in this rut. Please, if I can do anything on this channel, my goal is to get people excited about putting away, saving, investing in their future, and putting themselves in a better situation. I don't care if markets collapse. As long as you continue to put away and save and put yourself in a better situation, that's a good thing. And have a good attitude about the world is a good place and there's opportunities, and you just have to put yourself in the position for these opportunities. Now, Joe, I know you think with Microsoft and what's going on that the market's just beginning to crash because all of those things that are going on, but maybe that's true, really. But the goal is to continue to put away and continue to put yourself in a better position and continue to accumulate assets so that when that rainy day does come, you have something you can reach into to help yourself out so that you don't end up in a really bad spot. Anyway, back to the housing. So he started talking about what happened after one of the world wars and when all the servicemen came back after the Depression, how the Levitt brothers, and I think what he was saying is this is how Levittown, New Jersey was created, built a couple million small family homes to be able to support the amount of soldiers that were coming back from the war with an affordable place to live, and how the regulations have changed so much that that's not even something that would be able to be done in today's environment. And I think he's right about that. Licensing and regulations are such big hurdles, and I think that the D.R. Hortons and the Lennars and the other home builders are happy about that because it gives them a little bit of a boys club type of place. Forgive me that I can't think of what I'm trying to say, but it gives them this little boys club that they're the only ones that put up homes, and it's very hard for anybody else to be able to build or buy land. Generally, when there are auctions that are coming up from states or municipalities that are selling land, it goes straight to them to be able to build the homes because they know the process of getting the permits and everything else. They've all created friends, and as opposed to somebody else who might want to get in the industry and might take smaller margins to just build the homes to meet the demand. I mean, there should be even incentives to make affordable homes, and the licensing and regulation should be easier. I mean, my God, look at California after the fires. The Newsom said that they were going to make the process seamless and everything else. I don't even think they've started. There was this whole thing about how people are going to be able to put up homes. They're going to get through that process easier. And I'm going to make it so simple that we can get building and so on. Well, the way it's been, imagine being like a normal person who had bought those homes years ago, and you're kind of stuck in this position where your house burned down, you still owe your monthly payments, and you're running through these hurdles and you can't get the permits to build your house. Like, you're just stuck making payments on a home that you can't even build. Now, maybe your insurance is covering it. I don't know what's really going on, but what an awful position. Whereas if you're Jennifer Aniston and you've got 3 different homes, now her house did not burn down, as a little asterisk there, but maybe you have other places you can stay and maybe it doesn't impact you the same way. So I just think it really sucks that there's all of these hurdles that you have to get through in order to build or fix or do anything to begin with. And then you add to it that there is not enough housing supply. I think that's what makes housing so unaffordable. Now, COVID ramped it up. It made certain areas become much more desirable, especially like tourist areas like Montana, Nevada, some places in Florida. You're seeing a correction in Florida, but that is very Florida specific. If you dig into what's going on, because a lot of the doom and gloomers like to point to Florida and talk about how the market's collapsing, but look into the details of that, because it's really no surprise. It started with the high rise crashing, then it started with the hurricane, then it followed with the hurricanes, insurance prices doubling, HOA prices where they needed to have a certain amount of reserves, so they put on these special assessments, some on condos that the special assessment might have been half the value of the condo. I read a story, that's why I say it, about a condo a guy had bought for maybe $140,000. It had drifted up over the years. It was worth about $250 to $300 maybe. And then they got the special assessment because of the new regulations for the high rises of somewhere around $125,000. Now, I would have to look up the story again. I know it was over $100,000, but that crashed the price of the condo right back to the price where they had bought it. So you see a lot of things going on in Florida that are Florida specific and not necessarily real estate specific across the country. And I can't end the video without talking about Meta a little bit, that just absolutely crushed it. The CapEx was still spending on higher and higher amounts, but they're growing at like 24% and raised guidance. I mean, they are just crushing it. And Mark Zuckerberg talked about how the AI is making it where one person can do the job of many. So whether they're going to end up being able to cut their staff to be able to save on that end, or potentially they're just going to become more efficient at what they do, is going to keep propelling the stock higher and higher. Now, full disclosure, Meta is my largest position, so woohoo, very excited to see that. Target threatened, as I'm going to do a little woohoo, to drop below $100 after getting up to 110, but when I talk about Target and some of those others, it has, like, I don't care where the stock price goes. I've tried to explain this before. My comfort in Target is unless things change, they make plenty of money. Their price to earnings ratio is super low. They're using only 56% of their free cash flow to be able to pay what was a 5% dividend. Now it's into the mid 4s because the price of the stock has gone up a little. If things just chug along at that rate, that's great. Like, it's my version of owning a treasury or a CD and taking the risk of the market, so it does have more risk, but you can't get more than 3.5% on a CD anymore, so I'm getting an extra percent, and I have a little bit of risk of the market. And if Target is fortunate enough to drift higher, well, I really hit it out of the ballpark. Or something like Conagra that's paying an 8% dividend, and the food stocks are super out of favor, so maybe you hate it. Maybe you hate Kraft Heinz because Kraft Heinz revenues are actually dropping year over year, so there is some risk to it. But these are the things that I'm comfortable having instead of owning a CD and sitting in cash that I think will underperform the market. And the other thing, how do I not talk about metals? Oh my God, they are all over the place. Gold, I think it closed the day around 5,300 yesterday. It went up to over 5,500. It almost got to 5,600, to be perfectly honest, to fall all the way back down to 5,100. And now I don't remember where it is last, but it seemed like it kind of bottomed out there already and looks like it's drifting higher. Silver did the same thing. And if you look at a 1 year chart, it is crazy how parabolic it's gone. It's hard for me to not think they'll have some big correction at some point. I said to my brother, I'm like, brother, sorry, it just was funny. It went through my head. Anyway, I said to my brother, like, my gut is telling me this is a great opportunity to sell and it is a total bubble. I said, but my brain is reminding me, at least for me personally, I have a tiny bit of the metals, like a couple of this, but I bought it so cheap that I shouldn't even pay attention. And if they become outrageously expensive, like I talked about it, I think in yesterday or on the live video, Peter Schiff, who every time he speaks, I just want to pop him in the face. But to be fair, when he talks about a tokenized gold, let's pretend you are running some little stall in the middle of Peru. I think they know what gold and silver and copper and platinum are. Maybe not platinum, but I think they know what they are. It is a possibility that they would rather get paid in a small amount of silver and we could revert to a historical type of currency as opposed to getting any fiat currency, and they may have never even heard of Bitcoin. So I could see a scenario. It is not what I'm saying I think will happen. I have no idea what will happen. I barely know what's going to happen with me and my family and my life. So I sure don't know what's going to happen in the world in terms of currencies. But it would make sense to me that gold could be a store of value and silver or copper could be a transactional token. I could envision that, as much as I think that Peter is self-serving and loving that gold is going up because that is his portfolio and it's the type of hedge fund he runs. And he's working on tokenizing gold. And the way he's doing it is really smart. It would be backed by gold. And if you have some of the gold in the token form, you could request to get your physical gold if you wanted. That does make a lot of sense to me. And I do think it's very hard for people to understand what Bitcoin is. Now, keep in mind, I am kind of a believer in Bitcoin, and partially for the same reason I think gold has value, which is the historical aspect. However, there's no way to have any idea what any of them are valued at. They don't have earnings. It's just a matter of what people agree the value is. And if you look at a 1 year chart of probably any of the metals, but I really just looked at silver, it just goes, which is why it's very hard for me not to think it's a bubble that's going to have a big correction. Now, it may not be done. I mean, for all I know, it could go to $200 an ounce or more. And quite honestly, when I thought it would go to $100 an ounce, the main reason is it makes sense to me inflation-wise. Even if I go back to when it was trading $5 or $6 in the late 90s, when I think about what $5 or $10 was back there, it's crazy to me that that's become kind of like 80 or $100. I mean, you could see a movie for $5 and you could end up with popcorn and whatever else for maybe 10 or 12. You go to a movie with your wife or potentially your girlfriend or somebody. If you want popcorn and a soda, you might spend $100 to go see a movie, which is why I think Netflix is such a great deal. Anyway, that's a whole bunch of rambling, but I thought it would go to 100 just because when I think of inflation and I think of an ounce of silver, it kind of made sense to me that people might throw $100 for an ounce of silver. I don't know where it goes from here. When I look at the charts, it is absolutely dramatic and crazy how much it's moved in just a year. Be very careful. I wouldn't be piling into anything The markets are very illogical, and I don't know what's going on. And the metals in particular, either it is a bubble or the banks are sitting there, as my friend Dave said, buying with both hands because they know what's going on. Now, forgive that's trading terms. When you bought with both hands, it was like because you were buying as much as you could. So I guess we'll see. Just be careful. Don't over leverage. Don't buy too much of something. Don't believe that the thing that you're buying can't lose, because markets go all over the place. Oh, I'll ramble a bit about my buddy Steve, because he has a tendency to like plow right into something because he just believes it's going to go higher because it fell a bunch and it can't go lower. I keep trying to have this discussion about if you stay well diversified, while you may not do as well as the markets, you aren't going to have such huge swings. So even on a day like today, maybe your account isn't down so much if you own some of the things that move in the opposite direction of what goes on. If you own the boring things like the Canagras and the Targets and the Verizons that I mentioned, I understand that in big bull markets they will underperform, but they have been out of favor for so long that on days like today, what I noticed when I took a peek at my account, a lot of those had drifted a little bit higher. Speaking of which, my God, what a joke. Liberty Energy is now beginning to go higher. It's amazing how the guy who is the head of the Department of Energy, how first his Oklo stock did incredible, and now all of a sudden the other one is beginning to show some signs of life. I think it's up 100%. I think I bought a very small amount, so it's more like it's not the money, it's just seeing that it's happening. All of a sudden, Liberty, which was dying in the weeds, is now doing really well. Anyway, that's off topic. But if you stay well diversified, you know, you won't have the major swings of putting all of your eggs in one basket. The other thing is you really have to be long term. The problem with stocks is most people buy them and they look a month or two later or 6 months later, and either it hasn't gone anywhere or it's dropped a little bit, and they think, oh, these things are so stupid because they don't get rich overnight. You have to be in it for 20 years to allow the compounding to really happen. And I promise, if you put a little bit of money every month into an account and just let it be, you'll be really surprised how much it grows over 10 or 20 or 40 years. It's not about what it does over 1 year or 2 years. You're going to have good years. You're going to have bad years. If you don't want to look at individual stocks, they have things like VOO and QQQM. Anyway, enough of my ranting. I've talked long enough. I've seen the minute counter. I wish I had something to say about politics, because I like that people get all worked up about it, but I really don't have a lot. I was wondering when the stock market dropped a bunch if Trump did something that caused it, but I haven't seen anything yet. So chime in the comment section if you know what he did and it caused the markets to drop. Anyway, have a great Thursday. Hopefully I have time to do a video again tomorrow. I just don't know. Fortunately, I've been busy with things, so I haven't put out as much content as I would like. And we'll see how the market closes today and ends up tomorrow. Have a great day. Feel free not to hit the like or subscribe. It's fine with me. Bye-bye now. Oh, Tuesday, 11 a.m. Pacific time, the live. Hopefully you can make it.